Good day Forex trader. Your USD Forex signal, rangebound awaiting new catalyst. The pair will likely have a bearish breakout as bears test the next key support level at 1.0900. Bearish view. Sell the Euro USD pair and set a take profit at 1.0895. Add a stop loss at 1.1035. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1045 and a take profit at 1.1100. Add a stop loss at 1.0945. The Euro USD pair remained under pressure on Monday morning as the crisis in Ukraine continued. The pair dropped to a low of 1.0985, which was slightly below this month's high of 1.1137. Muted activities. The past few weeks have been a bit busy for the financial market. The European Central Bank, ECB, delivered its decision, in which it decided to leave interest rates unchanged. Its main shift was to lower the size of its asset purchase program. The other main event was from the Federal Reserve. In its monetary policy meeting, the bank decided to hike interest rate for the first time since 2018. It also hinted that it will increase interest rates in the remaining 6 meetings of the year. And in notes last week, analysts at Citigroup and Bank of America warned that the bank could deliver 3 consecutive rate hikes of 0.5%. Higher interest rates aim to slow inflation by making it attractive for people and save more money instead of spending. The common theme in the meetings by the Fed and the ECB was that higher interest rates will not ameliorate the high inflation situation. The banks see inflation rising because of the ongoing crisis in Ukraine. Economic data in the past few weeks have been mixed as well. For example, in the United States, the unemployment rate dropped to 3.8% while retail sales declined sharply in February. In Europe, the latest manufacturing and services PMIs were strong even as the European business confidence declined sharply. In the US, consumer confidence has fallen to the lowest level in about a decade because of the rising inflation. There will be no major economic data from the US and EU today. Therefore, the pair's key driver will be the ongoing crisis in Ukraine. Euro USD forecast. The Euro USD pair had a relatively calm week last week as investors reflected on the statements by Jerome Powell. It is trading at 1.0985, which is below last week's high of 1.1040. It is slightly above the 23.6% Fibonacci retracement level. It has moved slightly 25-period and 15-period moving averages while the MACD has moved below the neutral level. Therefore, the pair will likely have a bearish breakout as bears test the next key support level at 1.0900. This view will likely be invalidated if the price moves above the key resistance at 1.1045. GBP USD Forex signal, support at $1.3152 breaking down. Today's GBP USD signals. Risk 0.75%. Trades may only be entered between 8 a.m. and 5 p.m. London time today. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3152 or $1.3079. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3236. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP USD analysis. I wrote on March 16 that the best approach, which probably had low odds of success but a high potential risk-reward ratio, would be to look for a long trade close to or at a retracement back to the support level at $1.3000. Although the price never got back to $1.3000 that day, I was looking in the right direction, as despite earlier USD strength the price rose firmly over the day. The picture now is different, with a strong USD and a relatively firm but gradually weakening GBP. The Bank of England hiked rates last week, but there is some economic pessimism in the UK right now as tax hikes but the overall tax burden at its highest level for decades. The British pound has been one of the stronger major currencies lately, but the USD has opened this week strongly and we see the price starting to break down past the support level at $1.3152. Unless it snaps back above this level very quickly at the London Open, it will be likely to fall further over today until it reaches the next support level at $1.3079. I think the best course of action today will be to wait until 9 a.m. London time, and if the price is below $1.3150 at that time and looking bearish on the H1 and lower time frames, with some distance still to go to $1.3079, enter a short trade and monitor it on a lower time frame. Aud USD Forex signal, retreat to 0.7440 likely as momentum fades. The overall trend will remain being bullish in the near term. Bearish view. Sell the AUD USD and set a take profit at 0.7440. Add a stop loss at 0.7525. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7530 and a take profit at 0.7600. Add a stop loss at 0.7460. The AUD-USD pair held steady close to its highest level since November 2 last year ahead of the upcoming Australian budget. It is trading at 0.7515, which is 7.8% above the lowest level this year. It has also risen in the past 4 straight days. Australia budget. The biggest catalyst for the AUD-USD pair this week will be the latest Australian budget reading that will happen on Tuesday. Analysts expect the budget to lead to a substantial budget deficit as the government focuses on key issues in the economy. According to the Australian Financial Review, Scott Morrison's administration will unveil several projects as the economy reopens. For example, it will provide a $250 stimulus check to low and middle income earners. Another part of the budget will be on tax cuts for fuel in a bid to lower the current high energy prices. Therefore, AUD-USD traders will be looking at the budget and its impact on the economy. For example, new stimulus checks are expected to push inflation substantially higher than where it is today. These checks have been blamed for the substantially higher inflation rate in the US. As such, there is a likelihood that the Reserve Bank of Australia, RBA, will deliver its first interest rate hike in the coming months. Besides, other central banks in Canada, the US, the UK, and New Zealand have all embraced a more hawkish policy stance. This explains why the AUD-USD has risen in the past few weeks. The economic calendar will have no major events today. Therefore, investors will continue focusing on the crisis in Ukraine as they wait for the Australian budget report. The other key mover will be the American consumer confidence data by the Conference Board. The one by Michigan University showed that confidence dropped to the lowest level in over 10 years. Aud USD forecast. The AUD-USD pair has been in a strong bullish trend in the past few days. Last week, it managed to move above the important resistance level at 0.7440, which was the highest point on March 7. It has risen above the 25-day and 15-period moving averages while the MACD has started to form a bearish crossover pattern. Therefore, the likely scenario is where the pair retreats and retests the support at 0.7440 through what is known as a break and retest pattern. The overall trend will remain being bullish in the near term.